Hey everyone, and welcome back to the channel. In today's video, we're going to take a deep dive into car loans, but more specifically how we can pay them off faster while also saving on interest. Many videos have been made on YouTube about paying car loans faster by essentially transferring a car loan onto a personal line of credit. This strategy can help individuals save money, but the reality is for most people, their personal line of credit is typically going to have a much higher interest rate than their car loan, meaning the benefits are typically pretty minimal. So in today's video, we're going to take the same approach, but rather than using a personal line of credit, we're going to look at how we can potentially use a 0% APR credit card offer. So without wasting any more time, let's jump into our example. Julie currently has a $15,000 balance remaining on her car loan, which currently carries an interest rate of 6%. Julie is currently making her monthly payment of $333.06. Without making any changes to her current approach, it will take Julie 5 years to pay off the remaining balance on her car loan, and over this 5-year period, she'll pay a total of $19,984. From this amount, $15,000 of course will go directly to the principal, and $4,984 will go towards interest. But rather than taking this approach, Julie would like to take another approach to achieve two main things. 1, pay off her car loan faster, and 2, save on the amount of interest she pays. Julie recently applied for a new credit card that offers a 0% APR on balance transfers for the first 18 months. After applying and being approved, Julie was granted a limit of $12,000 on her new credit card. Before moving on, we do recognize that getting approved for one of these offers can be tricky, especially for an individual who has a lower credit score. In this case, likely the best course of action is going to be to first focus on improving your credit score, while also potentially building a strong relationship with an issuer who offers 0% APR transfers. Some credit card issuers may give preference to existing customers when offering balance transfer promotions. If you already have accounts with issuers and have a positive history of making payments on time, you may have a better chance of getting approved for a 0% APR transfer offer. So continuing with our example, now that Julie has been approved for her new card, she will then speak with the credit card issuer and provide them with things such as the loan account name so that they can fulfill the transfer of moving a portion of her car loan onto her new credit card. In Julie's case, she is going to transfer over $12,000 from her car loan onto her new credit card. Julie will now have $3,000 remaining on her car loan and $12,000 on her credit card. Since Julie was unable to transfer the full amount of her car loan onto her credit card, the next thing she's going to do is focus on using her monthly cash flow to pay off the remaining balance on her car loan while still satisfying the minimum payment on her credit card. With her $12,000 balance on her credit card, the minimum monthly payment currently sits at $360. The reason for this is pretty obvious, as the car loan will still be incurring interest while her credit card still has an 18-month interest-free period. Julie currently has $1,250 in monthly cash flow, meaning that she'll be able to pay off the remainder of her car loan in just over 3 months and pay a total of around $18.30 in interest. Now, Julie will shift her focus to paying off her credit card, which now has a balance of $10,920 as she has still been making her minimum monthly payment over the past 3 months. With 15 months remaining with 0% interest on this balance, Julie now has a decision to make on how to allocate her monthly cash flow. And that's because over this 15-month period, Julie is going to have a total of $18,750 in monthly cash flow, which of course will be greater than the remaining balance on her credit card of $10,920. So Julie's first option is to focus on paying the credit card as fast as possible. In this scenario, she'll be able to pay off the remaining balance on the credit card in just under 9 months. The advantage of this approach is Julie will be debt-free quicker, and by virtue of paying off the credit card balance faster, it will likely have a positive impact on Julie's credit score. Julie's second option is to make a monthly payment of $728, which will mean that right at the end of the remaining 0% APR period of 15 months, her loan will be paid off in full. The advantage of this approach is that now Julie will have an additional $522 in monthly cash flow, which she can either use to invest in other assets or use to build something such as an emergency fund. Since Julie's two goals were to pay off her debt faster and save on interest, she decides to use the first option and pay off the remaining balance on the credit card in just under 9 months. So let's pause here and compare this scenario to the alternative of Julie just paying her car loan over a 5-year period. As previously mentioned, by paying the loan over a 5-year period, Julie will pay a total of $4,984 in interest. Alternatively, by leveraging the 0% APR transfer offer, Julie will pay a total of $18.30 in interest on the remaining balance on the car loan and around $360 in balance transfer fees, which will of course allow her to be able to transfer that car loan onto her credit card. So by using this strategy, Julie will be able to pay off her car loan approximately 4 years faster while saving just over $4,600. Julie was able to achieve this result by taking advantage of a few different things. Firstly, the 0% APR transfer offer allowed her to gain 18 months free of interest payments on her transferred amount of $12,000, which of course directly allows her to save on interest. As well, by having this 18-month interest-free period, it creates a psychological incentive for Julie to get her balance paid off before this period is up. Our one ask is if you did get some value out of this video, please give it a thumbs up and consider subscribing to the channel for more content related to debt and everyday finance.